Money Saving Sunday time, and we're talking to financial analyst Kyle Odell. We wanted to chat with you just a little bit about the week that we've had. The Dow lost 800 points in one day. That was a pretty shocking number to see if you have a 401k. Should I be worried? Yeah, should I be worried?
You know, a lot of factors play into all of this, you know, and I think Wall Street loves to point to certain things and say, well, this is what caused it. You know, and in all those factors, a couple of the major ones, one was China, just overall, and it comes from the tariff, war that we're having with them. They're having a lot of economic challenges right now. Their yuan is down 10% here recently. Their interest rates have risen, so it means that, just to borrow money, it costs more and more. And so with that, their central bank really hasn't done anything. And so they're trying to devalue their currency to help keep up with this trade war that we have going on. And so they've got a lot of problems, and so that's spilling over into the US, and we're looking at that and saying, that's not good just for our global economy overall, and lack of liquidity of cash out there. And so one of the things that we've seen where our market environment is different than it was maybe 30 years ago is that when there's a day when trading starts, and maybe there's a sell-off, if there's more emotional reactions out there. So the market follows emotional reactions more than ever.
It seems like we always see those pictures of traders on the floor with kind of their heads, and yeah, that almost spells that emotional reaction.
Right, exactly. And when that happens, now there's more of a domino effect where you quickly see a bunch of selling in the market, almost overselling at times, which is part of what we saw last week. Or if there are good things in the marketplace and out there, you see maybe overbuying in the market. So you tend to see the market shifts a little more than it should on a daily basis sometimes.
But no panicking at this point?
No panicking yet.
Okay.
What we're seeing is just more of a lack of liquidity out there. And so there's not any big item that is, could cause us to tumble that we're seeing at this point. Now things can change at any point. They could change Monday, 6 months from now, or 5 years from now. We don't know when that's going to happen. But overall right now, we're not seeing any big items that would cause us to continue to tumble.
And real quick, you mentioned the tariffs, because we've been hearing a lot about tariffs recently, China and Canada. And let's talk specifically about cars. How is this going to affect us if we want to go out and buy a car tomorrow?
So when we're looking at companies like Ford and GM, there are two largest auto manufacturers. Their stocks have really taken a hit over the last year. And not just because of the tariffs, but Ford's down 30%, GM's down over 25% just in the last year. And we've seen our stock market go up though, right? And it's more from the environment. When you look at how companies like Uber and Lyft have had pretty big impacts on that industry, I think that's the biggest piece. But also Ford has lost over $1 billion this year just from the increase in tariffs, just to their profit. And so with that, whenever there's an increase on the tariff, that the companies really have three options. Either one, absorb that cost internally, so now their margins go down. Two, increase their prices and pass that on to us, the consumers. Or three, start laying off people. And that's what we're seeing Ford. They're talking about doing a restructuring and actually probably laying off 12% of their workforce in 2019. So we really haven't seen an impact from the tariffs yet, but I think we're going to see that in 2019. As companies start forecasting their costs for next year, they're going to build those extra costs in. So I think we're going to see an increase in those costs with inflation.
Keep an eye on it.
Kyle Odell, thank you so much. We appreciate it.